Good morning, I'm Maiki Oreta and you're watching Basis Points, where we delve deep into the numbers and the stories that drive our economy and shape our world. We begin in China, where the world's second largest economy opens its manufacturing and healthcare sectors to more foreign capital to bolster its struggling economy. The National Development and Reform Commission announced that starting November 1st, Beijing will remove the last remaining restrictions on foreign investments in the manufacturing sector. This includes eliminating requirements for majority control of printing factories and lifting the ban on investments in the production of Chinese herbal medicines. In addition, China is allowing foreigners to wholly own hospitals in 9 areas of the country, including the capital. The pilot project, which takes effect immediately, will allow foreign-owned hospitals in Beijing, Tianjin, Shanghai, Nanjing, Suzhou, Fuzhou, and Guangzhou, Shenzhen, and Hainan. The biotechnology sector will also be further opened, with foreign-funded firms now permitted to engage in the development of human stem cell and gene diagnosis technologies and provide related treatments in major free trade zones. Over in Thailand, the country's new Prime Minister, Paetongtarn Shinawatra, vows to stimulate the economy immediately as she assumes office. The new Thai leader is set to announce her plans in Parliament at a session on Thursday to mark the formal start of her administration. Paetongtarn plans to mainly continue the policies of her predecessor, former Premier Srettha Thavisin. This includes tackling issues like debt restructuring, supporting small businesses, and boosting the agriculture and tourism sectors. The new Prime Minister also intends to maintain Srettha's signature plan for digital wallet handouts targeting vulnerable groups. The budget for this, however, has yet to be disclosed. Paetongtarn, the youngest daughter of former Premier Thaksin Shinawatra, was elected as Prime Minister by the country's House of Representatives last month after the court removed Srettha for ethical violations. Here at home, the country's dollar reserves rise to their highest level in more than 2 years in August. Gross international reserves, or GIR, inched up by about 0.2% from the previous month to roughly $107 billion. This comes as the Bangko Sentral ng Pilipinas earned more from its foreign investments. Year on year, the country's dollar buffer is up by about 7%. The country's foreign exchange reserves reached their highest level in 29 months in August. This also marks the 11th consecutive month that the country's GIR remained above the $100 billion threshold. Now, in the United States, the embattled plane manufacturer Boeing reaches a labor deal with the union, potentially avoiding a crippling strike at its main factories this Friday. The proposed 4-year contract includes better retirement benefits and a general wage increase of 25%. It will also give the union greater input in the safety and quality of Boeing's production systems. The deal, however, still needs to be approved by Boeing's factory workers in a vote on September 12th. Boeing has been facing intense scrutiny over its quality and safety after a door plug on one of its planes detached mid-air from an Alaska Air jetliner in January. If approved, the labor deal would be an important win for new Boeing CEO Kelly Ortberg, who has vowed to turn the firm's image around. Here's a look at the week ahead for the financial markets. Topping the list, the August Consumer Price Index. Data from that in the U.S. that's out on Wednesday, September 11th. Economists expect inflation to have risen by 0.2%, matching the increase in July. As with other recent data, the latest inflation figures will impact the Federal Reserve's decision on how much it will cut rates next week. In a prelude to the Fed's highly anticipated move, the European Central Bank is expected to cut interest rates again on Thursday. Traders are also fully pricing in a third cut in October, but ECB policymakers are wary of making any promises. Still in Europe, the United Kingdom will release its latest monthly wages report on September 10th. Wages increased at their lowest pace in nearly 2 quarters in the quarter ending June 30. And here in Asia, campaigning for the presidential elections of Japan's ruling Liberal Democratic Party begins on September 12th. The vote will determine the country's next prime minister after Fumio Kishida stepped down due to a slush fund scandal. The new premier will take over the effort to improve corporate governance that boosted stocks to record highs this year, as well as support the Bank of Japan's tightening campaign after decades of deflation. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Over in Wall Street, U.S. futures are flat after coming off their worst weekly decline since March 2023. This comes after weak jobs data added to concerns over the health of the world's largest economy. Futures tied to the three main indices are roughly unchanged, with futures tied to the S&P 500 and the Nasdaq losing less than 0.1%. U.S. stocks are coming off a rocky week, with the main indices suffering their worst weekly decline since March of 2023. This after non-farm payrolls grew by 142,000 in August, less than estimates of a 161,000 gain. Now, the unemployment rate, however, edged lower to 4.2%, in line with expectations. The mixed job figures come amid a chorus of Fed officials declaring that the U.S. Central Bank is ready to start cutting interest rates at its policy meeting this month. Fed Governor Christopher Waller says that the central bank is leaning towards a quarter-point reduction this month, but he left the door open for larger rate cuts if necessary later this year. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Now, trading at the PSEi, markets trading to the downside, down by about 0.2% to 69.24. All shares indexed down as well, down by 0.1%. The losses, however, are being countered by slight gains in the financials and holding firms. They're up by about 0.2% each. Meantime, the industrial, services, mining, and oil and property counters are in the red. Now, to help us make sense of these numbers, we have with us Ron Acoba, the founder and chief investment strategist from Trading Edge Consultancy. Good morning, Ron. Thanks for joining us.
Good morning, Maiki. Thank you for having me.
Ron, looks like the optimism over the lower August CPI figures are being eclipsed by the downbeat sentiment in Wall Street last Friday. That said, do you expect the market, as we wait for the results of the Fed's rate meeting about a week from now, do you think that the market's going to be trading within a tight band?
Well, surely. First and foremost, I expect the index to open in the red as negative sentiment from the U.S. Spills over into the local market. As you mentioned earlier, the broader S&P 500 index declined by about 1.7%, while the Nasdaq declined by 2.5%. In reaction to the lower than expected jobs additions in the U.S. So we can expect traders to be wary somewhat to open the week. But between today and the much awaited Fed monetary policy decision next week, I expect the index to just trade within a tight band, specifically between the 6,800 and 7,000 levels.
Okay. Now, over in the U.S., Ron, jobs data, specifically payroll data, came in below expectations. They expected 160,000 jobs, but only 142,000 were added in August. How much does this affect your outlook? And are you worried about the health of the U.S. economy?
Well, it's interesting to say, Mikey, because if we see this particular numbers, let's say a couple of months back, the market would actually cheer for it because it brings us closer to a federal rate cut. But now that we're here, now that we're like a few days ahead of that monetary policy decision, obviously the market's reaction is a bit different now, because lower than expected jobs addition would actually signify that the U.S. could potentially go closer to a hard landing or a recession. If you ask me if we're going to that, I don't really expect that the U.S. is heading into a hard landing or going into a recession, because if you look at the recent economic report or the GDP report that they had in the last quarters, nothing in there says that any sector are in trouble. Even if you look at the CPI figures clearly demonstrate that demand from the consumer end is particularly strong.
Mm-hmm. We're at a very interesting junction, Ron, because if you look at it on black and white, a cut by 50 basis points should be good for everybody, right?
Yeah.
But if it comes on the back of a hard landing in the U.S., then it's a bit of a negative for us. Can you talk to us about why a deeper cut by 50 basis points by the Fed next week, why that could be a plus and a downside for our market?
Firstly, it can be negative because the market can react negatively to it because, again, a 50 basis point cut may signify that the U.S. is going closer into a recession. On the other hand, it could actually be positive for risk assets in general. Firstly, because a 50 basis point cut by the Fed gives the BSP more leeway to cut its rates. This is aside from the fact that lower interest rates would effectively spill over to lower borrowing costs.
Okay, we've just got a few more minutes, so I'll try to squeeze in 2 more questions, Ron. Let's talk about the peso. It appreciated to 55 to the dollar level on expectations of a deeper rate cut by the Fed. Where might a cut of 25 to 50 basis points take our local currency?
I think now the market is pricing in a possibility of 50 basis point cut, but not too much. It's still leaning towards a 25 basis point cut for September, because if you look at futures numbers, the likelihood of a 25 basis point cut is about 70% versus the 30% of a 50 basis point cut. But up to the end of the year, up to the next two monetary policy decisions at Fed, there is actually a 90% probability that the Fed will end up cutting by 100 basis points. This is what is actually being reflected in the peso, and that's why we're seeing the peso appreciate now to about 55.9, 55.85 as we speak.
And while a lot of people are concerned about the depth of these cuts, what's important to know, what's important to take into perspective is the balance. It's the amount of the cuts. And the fact that the Fed and our Philippine Central Bank, they've shifted their monetary policy. Can you talk to us about the importance of this shift?
For me, it's not really the amount of cut that is important, but as you mentioned, it is the shift, because whether the Fed cuts by 25 or 50 bips, what is important for me is that it will mark the change in monetary policy. Presently, the 5.5% interest rate of the Federal Reserve is actually its highest in more than 20 years. Imagine that, the highest in more than 20 years. So a cut is not actually going to be a one-off cut, but a change in policy, and we expect it to be the start of further cuts, not just for this year, but for the next year or two, which hopefully will bring back interest rates to normal levels. For example, in the Philippines, from its current level of 6.25%, perhaps back to its normal level of around between 3 to 4%. Same thing in the U.S.
So it's not so much the size of the short-term cuts, but it's the totality of the cuts. Okay, interesting.
And the start and the beginning of a shift.
Right.
In
Okay,
policy.
Ron, where do you think these shifts in monetary policy, at least over the short term, will take the PSE index through to this quarter?
We're still a few months till the end of the year. I'm on the optimistic end, assuming that we breach the 7,000 level on the back of these cuts. Then it's easy for the PSEi to actually reach the 7,500 level. So I'm on that end. I expect the PSEi to eventually clear 7,000 and route to 7,500 at the end of the year.
All right, 7.5, that would be nice to look forward to. Another thing before I let you go, Ron, I wanted to talk about some shifts in the market cap of 2 specific companies, for better and for worse. 2 companies come to fore when you look at this. It's DigiPlus and Nickel Asia. On the plus side, retail gamer, DigiPlus, formerly known as Leisure Resorts World, the market cap has been soaring consistently. Looks like it's poised to join the PSE index when the rebalancing takes place in September. What are your thoughts on the market cap of this stock, and where do you think it's going to take it?
Well, not so soon in September, but in February.
Sorry, yes, it's February.
Yeah, February of next year. As it stands, DG Plus market cap you mentioned is already doing more than 100 billion. On the other end, Nickel Asia has fallen down to below 46 billion in market cap. Assuming DG Plus is able to maintain its current level from today up to a month before next year's rebalancing, then it is actually a strong candidate to be included in the PSEi. Some analysts would argue that that might not be the case because initially in the year, DG Plus started at just 10 to 11 pesos, which brings its average market cap to just around 75 billion pesos. But even if you say its volume-weighted average price on a year-to-date basis is just 75 billion, at 75 billion, it's still larger than Nickel Asia's 46 billion. It's still larger than Wilcon's 73 billion pesos. So again, assuming that DG Plus maintains its current level from this point onwards, or even improve it's going to be a strong candidate to be included in the PSEi.
All right, we'll be watching out for these developments. Thank you very much, Ron.
Thank you, Maiki.
That was Ron Acoba, the Chief Investment Strategist of Trading Edge Consultancy. Now, in other news, before we let you go, let's check on the business headlines in the major news websites. On Inquirer, ANZ Research says that the Philippine economy may not immediately feel the impacts of the Bangko Sentral ng Pilipinas' easing cycle, as consumers may defer some non-essential spending to rebuild their pandemic-hit balance sheets. And on Business World, Macquarie Group's chief Shamara Wikraman Ayake says that concerns about regulation and infrastructure need to be resolved to unlock Australian investments in the Philippine mining and renewable energy sectors. Macquarie CEO stresses that the Philippines is rich in copper, gold, and cobalt, but little foreign investment has come in to develop these resources. And on the Philippine Star, the World Bank expects food inflation to sustain its downtrend as reduced tariffs on rice temper price increases. This after headline inflation eased to a 7-month low of 3.3% in August due to slower increases in food prices. Now, we've reached the end of the show, but keep it here on BNC as we bring you the Senate hearing on illegal Philippine offshore gaming operators, or POGOs. Now, attending the legislative inquiry this morning is dismissed Bamban Mayor Alice Guo. The hearing comes just days after Guo was returned to the country following her arrest in Indonesia.
You are lying!
The plot.
Lumaki po ako sa farm.
Ulit-ulit naman.
The characters.
So si Alice, hindi mo siya kapatid?
Hindi po.
The twists.
Ano nga ba ang kinalaman niya?
You are lying!
And the turn of events.
Alice was arrested in Indonesia.
As a warning to those who attempt.
This Monday, the probing continues. And Billionario News Channel gives you the best seat to the Senate Pogo Fiasco Pro, a BNC special coverage. Monday, 10 a.m.
Stay tuned to our special coverage anchored by Pinky Webb, which begins at 10 a.m. And that's it for Basis Points. I'm Maiki Oreta. Stay tuned tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.